Progress.
Hey, this is Jon Johnson with Van Dyke Mortgage, and this is Gabriela Cernes France.
Good morning, John.
Hey, good morning. How you doing today?
It's a great day.
I love it. It is a great day today.
Yes.
And this is our morning or mortgage market mastermind with myself and Gabriela. We're going to be going over some of the topics and some of the news and items that have come across over the past month in mortgage and in real estate. Are you excited?
Yes, there's been a lot happening.
It's been a little bit.
Yes, especially since last month when we were, last recording.
It was. Well, let's do this.
All right.
All right. So, of course, the goal of this YouTube page, my business in general, I'm trying to have people become debt-free through home ownership. So the process is purchase a home. After you purchase a home, we're trying to get you refinance to be able to get off mortgage insurance. And then normally within 3 to 4 years, you can be able to refinance to be able to pay off your debt to where you only have paying off your mortgage as your final debt to pay off towards having a debt-free life. So that's the goal of the page. That's the goal of what I want to do in this mortgage business. And that's what's going to surround a majority of this. But good. Before we get started, Gabriela, what has been in your mind over the past 30 or so days?
Hearing a lot of realtors just keep talking about the rates, and there's two perspectives that the realtors are having. It's like, oh my God, this is going to hurt my business. And the other ones that are, actively seeking to get a little bit more informed, especially if they're, very newer to the business in the industry. They've never been through something like this, and at least in the past, gosh,
Yep.
You're going to pull up the stats on how long it's been. So we're going to save that nugget for a little bit later, but really just how much more interested realtors are about getting educated about the mortgage industry, interest rates, because they need to also go out there and sell why their services are still needed right now. And even though we're saying rates are still historically low compared to, how they were, 10, 20, 30 years before, people are just focused on the now. What's the instant gratification of the now? So that's kind of been a lot.
I would agree with you. When times are good, people feel as if they don't need as much education.
Yeah.
They just go out there, they sell real estate, and it is what it is. But when you're in times where people are throwing out the R word, recession, when rates are weird and they've been climbing up over the past 6 to 12 months to where they've almost doubled since January, et cetera, et cetera. It's a different time. It's a changing time to where people want and need education, which is part of what we're doing here. Is educating real estate agents, buyers, and even if lenders, if some of you guys stumble across, trying to educate you guys as well to what's actually happening to our best knowledge. I'm not an economist. Gabriela is not an economist. She's a marketer. I'm just, somebody that cares about people being debt free. But we're going to do this together. For myself, I am 1000% motivated for factory homes. I call them, manufactured homes, modular homes, whatever you want to call a home that is made in a factory. I am extremely motivated for. These properties are nothing like what you've seen your grandmother or your great uncle or whoever living in. These properties nowadays look just like stick-built homes. The safety requirements are at least stick-built and sometimes even greater than stick-built homes because they're producing climate-controlled facilities. There's a lot of possibilities that can be done with these homes, and they come at a much more affordable price point. Single wide being the most affordable, and then double wide being next. And then, you go to site-built homes, they're pretty much almost double the price point of these properties. So I'm a huge fan of that, and we're going to see where that goes over the next few years when it comes to I'm able to assist and serve people when it comes to that space.
Yeah, I didn't actually know that. I think I just learned something new about your affinity for modular and manufactured homes and stuff. Florida is very well known for it, the positive sides of it, when it comes to cost. And then, of course, there are some, negatives and, when we say cons to it. But you kind of really already hit that point is that the building codes and requirements have changed significantly. We recently had a hurricane, unfortunately, pass, through our neighbors in the south, and but the standards of building codes changed in 1992 with Hurricane Andrew when it hit the Miami Homestead area. So, fun I mean, just facts that you tend to remember, things that you realize that because of that incident, changes were made so that building codes and people can have a little bit more faith and trust in what they're buying. Even a few years ago, my husband and I even looked into one to have it as an investment property as well, because we were looking at some land.
There is a lot. It's one of those things people don't fully think about, and it's like you can't go to too many people. A majority of real estate agents that I know, they don't have a ton of information on these types of properties. Majority of lenders I know don't want to touch these types of properties. At least I'm pretty blessed to be on our team and to be with our company to where, I close at least a few of these every single year. And so I go through the process with closing them. Of course, when you're closing them with conventional FHA and your normal financing, which is the way we close them, you can only close it on private land. If you have to be able to own the land in order to be able to close with your normal guideline. In order to be able to close with, if you're renting the lot underneath you, like if you're in a park, then you have to get a different type of loan, pay cash. It's called a chattel loan, things of that nature. It's a different process. So figuring out how the chattel process loans work, how to best serve people who are not only on their own land, but somebody who wants to buy land and get that developed and put a new property on it. To also people inside of parks as well. I know we had my mother here the other day, and I was like, hey, a majority of these parks are 55 plus. I'm pretty sure. I mean, she's 23. Let's just say that she's 23, but I think they may waive qualifications so she could potentially be able to get into some of these parks. But that's where my head is at right now. And it came on a spur of motivation, and it has been it was a very strong motivation that just hit me one day, and the next day it still had it. And so I just kept organizing. And even this morning, I went out at 6 a.m., looked at mobile parks for like 2 hours, just getting a little landscape surroundings on a Saturday morning. Yep, that's how I enjoy my Saturdays. Look at that mobile parks.
Some people go thrifting, some people go, hiking. John goes and checks out, mobile home communities to see, hey, what's going out there?
You'll be surprised. There's so many nice people in mobile parks. I just put the window down. I drive through them, look at the homes, look at the areas, see what types of properties are in these certain parks. Some parks are nicer than others. Some have pools. Some have these nice big giant ponds we can fish in. Some have shuffleboards. Shuffleboard, between shuffleboards and pickleball, that's the market right now for entertainment.
We can keep talking about that, but I definitely cruised through them. In my previous career in home care, we had clients who were in those communities, and I have nothing but good things to say about the ones that I saw.
Same. I grew up living one in probably 40, 50 years, so I'm well acquainted with them, but trying to get more on the knowledge of the numbers and whatnot. Rates. Everybody wants to know about rates. You're talking to mortgage people. You want to know about rates. So historically, if you look at the graph, yes, over the past 6 months to a year, rates have gone up. But historically, if you look at this graph, hey, we're right at historical averages right now. Yes, we had some crazy low years over the past couple of years, and anybody who's in our industry should know. Barry B preaches the mortgage gospel. Rates were highly pushed because the Federal Reserve was buying what's called mortgage-backed securities. They were doing that, and they were buying them in billions of dollars every single day. You don't have to know how it all works. You just understand the Federal Reserve was buying billions of dollars of an item that made mortgage rates stay artificially low. They pulled out of that, and the biggest thing affecting rates right now is inflation. And before inflation got crazy over the past couple of years, many things could affect the rates on a daily basis. It could be a tweet from somebody powerful. It could be, something else happens, big layoffs. It's a ton of different factors that can end up affecting the rates. But the number one factor is inflation. So if inflation is at 2%, we take that number one factor out. We look at all these other factors. But when inflation is 6, 7, 8%, like it is right now, it is the biggest factor. And this is where rates are at the last 12 months. And as you can see, yes, it has increased. And this is not rates for everyone, by the way. When you get mortgage rates, if you're getting a conventional FHA via one of these normal loans, once you're in the contract, you're locking in. There's about 15 different rates per program you can be able to lock in. And when you lock it in, you can lock it in for 30 days. You can lock it in for 45 days, 60 days. And in our company, we go up to about 330 days now, just in case if somebody's under contract for a new build.
Correct.
But overall, though, it's going from about 3%, and we're pretty much at 7% right now. So big picture, in my opinion, if you need to buy a home, if you're renting a home, by the way, you're paying 100% interest rate. So who cares what this number is? If it's 15% interest rate, you're paying 100% when you're renting a home. So if you're trying to build legacy and equity for your family, if you have a less than 1 million net worth, owning a home is going to end up being probably 50 to 75% of your net worth once you actually own that property. So get into a home if you're renting. If you're already in a home, but you may end up having another kid or 2 kids, you need to move up. That's another reason to get into another home. If you have kids moved out and your home is too big and now you want to sell that and downsize, that's a reason. The interest rate is a factor, but it is not the main factor. As long as the monthly payments can work out for you, I still recommend you go out there and look for homes, because if you keep waiting for the magical day when interest rates go down, who knows? They could go into 7.5, 8%, 9%. All of the experts were stating that, oh, it should go into the high 3s this year. That's what they were stating end of last year, beginning of this year. Every single last one of them. Even my favorite guy, Barry Abebe, he was like, hey, I think it could go into the high 3s, maybe mid 4s. And look where we're at right now. So it's very tough to time this, to be able to see where it's going to go. It's like time in the stock market, but overall, it's not the worst thing ever. What's your opinion on it?
Curveball. That's going to be my zing, curveball. And that's really kind of goes back to when we talk about Barry Habib, he is, if you want to give a little background on who he is the founder of MBS Highway.
Founder of MBS Highway,
yes.
Correct.
So
90% of my videos, I'm probably getting some information from him.
Yes.
And I'm reformulating into some sort of Jon Johnson way of presenting that information.
Well, you take the information and you digest it, and then you put it together like in layman's terms so that people can understand it. Because it's really what we're trying to do is we're trying to take the complicated parts of the mortgage industry and then really just make it like, hey, understand it at this level. You don't have to dig in to be the expert. That is why Jon goes and looks at what the experts are talking about. So yes, it was forecasted to be in the 3s and 4s, and that is not what we're looking at right now. But it's also important to understand that there's a lot of factors that go into affecting that. You already mentioned, inflation. If people who are not looking at the news, that's okay. That everybody has their own personal opinion when it comes to that. But I'm not asking you to look at like current news. Like there's your local community news, there's your state news, there's your national news, international news. What is happening outside of this country does have an impact, whether it's directly or indirectly, with how things are going to affect the economy in this country right now. This isn't a political podcast, so I'm not going to go into any of those particulars of it, but that is really where I think the curveball kind of came into play, is that people were looking at it from like, okay, statistically speaking, where we're trending, this is where we should be heading to. Remember, trending, heading to, versus, oh my God, something happened internationally. And now we're seeing like this unfortunate ripple effect that is now affecting the US economy, which now we're talking about like, this affects me, or, me as in, people who are looking to buy right now. The rates, as you pointed out, as the mortgage professional, that is the reason why you got licensed. That is the reason you're educated in this part, is so that you can say, look, historically, this is where we're at. Yes, the rates are at 7s right now. However, if we were to look back at the last 40 years, and you've done a great job showing that data before, we're still not in a bad place when it comes to as far as like interest rates. But that is just one piece of the decision-making puzzle that buyers have to make at this point. There are other factors such as inventory that is available right now in the current market, where you're looking to buy. Is there affordable inventory, houses, townhouses, whatever type of living dwelling that you're looking at. You may have to look outside of your desired area for quite some time. Are you willing to make that decision? But if your goal and your must have is to be in this particular area of town, this particular, for school, for kids, for work, whatever the reasons are, interest rates are not going to matter at that point, because you have a strong why that I need to live in this area. Later on down the line, you talk to a mortgage professional, you talk to a financial advisor, And that's where they say, okay, let's evaluate where we currently are and look at refinancing and some other financial decisions that you can make at that point.
Agreed.
Good summary, I think.
Yeah.
Okay.
Of course. We got the robot and myself. We got the hearts and feels of Gabriela.
Haven't pulled any tears yet, guys.
You haven't.
No. Except for when your mom was here.
I know that may have to be like a. I'll figure out when we can have her on. She's the combination of care between you two. That's the new care.
The new care.
The new care. All right. So credit. Huge fan of credit. Yes. We'll be trying to pull something credit wise on here every single month now as well. Just because I'm not a fan of personal credit. Business credit and debt is one thing, but when people are getting credit in things on credit for personal reasons, it's shown that it has not been that useful and helpful for people. And unfortunately, you can't drink a beer until you're 21, but yet you can get credit cards from an extremely early age. They're targeting kids from age like 16. And one of the biggest things you'll get as soon as you go to college campus, you already went into student loan debt when you go into a college campus. But as soon as you get on there, you have 5 different credit card companies that are all trying to get you to sign up for their credit cards.
I had 2 that I can recall very vividly. And I graduated in 1999. And by 2000, I had 3 credit cards already. I'm talking about, I'm definitely going to say my age here. So from 18 to 20 years old, I was easily able to get credit cards. Easily. Crazy. Now, obviously not having the real understanding of like, oh, okay, this is kind of like, we're going to lend you some money, but we're going to charge you some interest, and they weren't like high dollar amounts either. I mean, it was a program to incentivize college kids to get a credit card. Again, a program to incentivize college kids. We literally just graduated high school.
You have no money in your bank. You got $50 in the bank.
What education did we have about financial literacy at that point? And we're given a credit card like this.
You maybe know all 50 states, and that's about it.
Yeah, I mean, that was quite a while ago for me at this point. Now I say, no, thank you. I'm working, don't want to open up a new credit line because now I know.
Yeah, I mean, I'm looking at people's numbers all day long. And people, whether you're making $50K a year or you're making $200K a year, almost everyone has lines of credit. And that credit the amount of credit just increases when it goes from people making $50K to people making $200K. $50K may have, 5 to 10K of credit cards, maybe like $50K in student loans. The person making $200K, they may have $100K in student loans, along with maybe like $20K in credit cards. So there are some that are doing good, but it's an 80-20 rule in my opinion. 80% of people out there have credit, and the credit is not in good shape, and unfortunately, is not a good thing. And people just don't understand it. First off, cash is king. So if you got cash, you can buy things. But things are so inflated with prices nowadays. Cars are super inflated. Homes, you can say they're inflated. I'll say site-built homes are inflated. Mobile home and manufactured homes, they're not inflated. They're at market, in my opinion, when it comes to where they should be at. You have a lot of people that should be buying, in my opinion, manufactured mobiles who are trying to buy site-built homes, which is probably inflating that portion of the market. So if those people came back down to manufactured homes, it'll be less. But when it comes to credit, though, people don't understand that if you have 0 credit, like you have no credit card, you like being debt free, and you decide, hey, I may want to get some credit to be able to get a car soon or to be able to buy a home or whatever else, you only need credit for 2 or 3 months. You can get a secured $300 credit card, just one credit card, use it for gas, pay it $10, do that 2 or 3 months in a row, and you're going to have a 680, 690 credit score. Which is going to be good enough. That is, like, in my opinion, that's like B tier when it comes to credit. That is still good credit. And if you use that same one credit card for up to a year, you can probably get into like the low to mid 700s, which is A tier for credit. And you have people that obsess over getting 800 credit score. But when it comes down to it, especially in the mortgage world, anything over 740 is the exact same thing to us. So whether you have 750, 760, 780, 800, it's going to give you pretty much the exact same numbers. So people stress way too much about this credit thing. All you need is one credit card, use it one time, pay the $10. That's going to give you enough credit score, and actually good credit score, to be able to get whatever you want, from car to home to anything else. But as you can see on this, household debt service payments as a percent of disposable income, it was floating around 10% a few years ago. As that's the thing about recessions. Recessions are not good, but it does force people to save. So as soon as the whole COVID situation happened, people weren't spending as much money. There were some stimulus checks too, and every time there was a stimulus check, people did actually use an okay amount of that money towards some of their debts and bills and things of that nature. So as you can see, it went from like maybe around 10% to around almost like 8.8%. And it's been going up and down a little bit. But as you can see, unfortunately, it seems as if it's trending up a little bit over the past few quarters. So we'll see how this goes. This is something I'm going to be interested in. I'm going to be trying to find out what's going to be the best graph to look at for this when it comes to household debt in the nation. Anything else you'd like to add to this?
Yeah, you covered John, you always do a great job covering it very well. And
thank you.
So now it's, my viewpoint on it is that you're absolutely right. During the pandemic, not only was it because businesses were closed down, such a difficult time, honestly, for a lot of people in this country. Yes, the stimulus checks did help, some individuals who otherwise wouldn't have had something. There was unemployment. There was, all these type of relief programs that were put together to help people at that time. And I even explained it in one podcast that, it's still working and receiving, these funds as well. I put them away for savings, and I did it because I knew that this is just in case I needed for something coming up. And it wasn't like I had this crystal ball that, hey, I know things are going to tank, so I'm going to go ahead and make sure I save all this money now. It's just through the education piece of learning about how money works, how credit works and everything. And that's really kind of the best example right now of what we're looking at. I mean, we're looking at some dips right now. Obviously, there's a lot of concerns with, with inflation, with the cost of goods and everything. I hear this all the time at home with my parents. They, we're multi-general household. So, my parents are in their 60s and 70s. And so, of course, they're, they come home saying, oh, I had to pay more money for X, Y, and Z, whatever food item that they normally, eggs, bread, the staple things that are bought in most homes. And, I have to kind of explain to them, it's like, yes, that is the case, but we're not going to go back to the days where we see gas at $1. Those are just not those times now. And a lot of times people get stuck in the past. And that's really where people are having such a hard time adapting to what is currently happening. It is, again, my own opinion. I'm basing it on just how our household has dealt with it, how people that we have talked to, in professionals in the industry as well, who were, riding this wave. And now, one of the stories that stuck out the most to me, that we were discussing in one of our regional sales meeting, is that there was a time when, loan originators in our company were just making a lot of money, and they bought new cars, bought bigger houses, spent a lot of money during that time. And then unfortunately the 2007, 2008 crash happened, and some people lost a lot. Some lost cars, some lost extra homes. And when we're looking at consumer buying habits, we also have to put in consideration consumer saving habits as well. So I will leave it on that note.
Good. You got it.
Some examples, some, perspective, and, we're not here to change your mind on anything, but we are here to provide just education and some perspective.
You got it. Some expert perspective. We're in the business. We are not, I don't have a credit degree. I do have an econ degree, but I don't have I'm not a PhD. I'm not a professor in economics, finance, those types of things. So
I will tell you this, John, they got it wrong too.
All of them got it wrong. You were correct.
Doesn't matter the degree, they got it wrong
All
too.
of them got it wrong.
That's the irony of things.
Yeah, gotta love it.
Yeah.
All right. active listing count versus days on market. This is one of my favorite things to look at, just because the news is going to give you one or two. They're not going to give you the one on the right, or they're going to give you one on the right, and they're not going to tell. They don't tell you these things in a historical perspective. Yeah. They always tell you data like this in a month-over-month perspective. And in real estate, is very cyclical. And all these data that I show in the beginning of the year, it does a certain thing. Then the summertime, for one of these data points, it goes a certain direction. And then towards the end of the year, it goes towards another direction. Yeah. And as you can see, let's say on the active listing count, it does exactly that. If you take out the light blue line in the middle, which is the COVID year is just an anomaly year, every other year has a very similar trend for a number of listings. So you have in the beginning of the year, it's pretty steady, not too much going on. Then around the middle of the year, probably around tax return season, around summertime when kids are getting out and parents are, thinking about making those moves and whatnot, listings go up. And then once kids go back to school, it gets towards holiday time, towards the end of the year, those listings go back down. And once again, 2022 is the, I don't even know what color that is, golden line. It has had a steeper increase when it comes to its summertime amount of inventory. But as you can see, it has started to level off like it does every single year. And I would almost guarantee you that by the time we get to November, December, it's going to either be completely level or it's going to come down a little bit the same way it has in these previous years. Days on market as well. Actually, we'll stay on that one. Active listing. Anything else you'd like to add to that one before we go to days on market part of it?
Yeah, we're always going to remind people, especially because the anomaly years, that we use that term a lot in our industry right now, because you cannot compare previous trends to what is currently happening to those really two years, not really good years, but two really interesting years that happened both in the real estate and the mortgage side of things. Okay, that now a lot of things that we were starting to hear, maybe even as far as back as the springtime, is that a shift in the market, and a shift. It wasn't like it was explained what the shift necessarily was going to be, but there was something that was starting to, a lot of people who study real estate market trends, who study mortgage trends, they were starting to realize, like, okay, this is not sustainable. The market right now, consumer spending, buying, you name it, how the economy is currently, behaving, we're going to start seeing a shift. They call it the shift, a change, whatever you want to address it as. We're going to start seeing what is called the new normal. But when you look at it from a graph, or from when you look at, we're visual individuals, we need to see things, because we can't, if you were to hear all this right now, you would have no idea what we're talking about until you put it into a graph. But there is starting to be a new normal where it's starting to look somewhat like previous years, but not nearly to the same numbers and degree as before. So we're looking at the curves that are happening in the market, at least in the graph at this point. Also, something important to note that, you're right, like when we're looking at, it's not just families who are making, buying and selling decisions. When kids are going back to school, there are also people that are downsizing at the same time. So people that are buying, people that are listing, those numbers are going to also increase or fluctuate. And we saw a lot of people who were remote workers. So these are other factors that, it was pretty evident that people were moving, really to like the Florida area. We're going to focus on the Florida market, where I'm not an expert or know much about the other markets, but I definitely understand, at least, that we saw a high increase of people moving to this state. Lots of pros to coming and living here. There's also some cons to living here as well. But the biggest one is that people who were remote workers could go work anywhere. So why not work in a state that you have pretty much everything that your family could want, or where there's no state income taxes? That is a high point that was also made as well. So that's what we're seeing. Or I know we'll get to days on market, and I'm trying to hold back from saying anything on that. But it is kind of interesting to start seeing the curves go back to the new normal, but something that resembles previous years.
Yep. The news media is going to say,
yeah,
oh my gosh, inventory is going up from June to August, X amount. We're in a housing recession. Like that's not anywhere close to where we're at right now.
Yeah.
I want to make one more mention about this right here.
Yeah.
Like in comparison, this is the lowest of lowest of lowest of lowest of inventory in years. Like this right here only shows a 4 or 5 year perspective. If I were to zoom this out 10 years, 20 years, etc., this inventory number, even these numbers from 2017, 2018, this would be like historical what we average. This is 2017, 2018, etc. And this is what we've been at over the past, 21, 22 is way down here. So inventory going up a little bit is a good thing. We want more inventory. We need more inventory.
Yes.
We need inventory that's higher than these 2017 numbers, in my opinion, to be at a more stable market to where buyers have the ability to be able to buy. Which leads over to the days on market category as well. This is what this is the main graph is going to tell you what type of real estate market we are in. So forget all the other graphs that they tell you. There's 10 other different ones, probably 20 different graphs you can look at. But the main one is going to say, hey, what type of market are we in real estate? It's going to be the days on market. That's the number of days that homes would average before we have no more inventory. If there was no more inventory that came on the market, same amount of buyers, this is how long it would take before we had no more inventory. And once again, this is another one of those graphs where this number was at the lowest of lowest of lowest of lowest the past couple of years. And so seeing the number go up is not a bad thing. And as you can see, if we take out that light blue line, which is 2020, it's doing the exact same thing it does every single year. Days on market goes down in the summertime. And then once you get back into the fall towards wintertime, it goes back up again. Has it increased more than it has, let's say, in 2021? Yes, but it's not even anywhere close to the numbers that we were in 2017, 2018. And during that time, I can remember agents and loan officers saying, oh my gosh, we only have 2 months of inventory. That's crazy. 60 days of inventory. That's crazy. So getting back up into the 2 to 3 month, that's still going to be a heavy seller's market, which means sellers have a ton of power. You don't start getting into a market where buyers have a power, and you can get a ton of savvy buyers coming in there until you get around probably like 5, 6, 7 months worth of inventory. What do you have to say to that, Gabriela?
That is actually something that I was actually taught by a realtor. Is like you have to look at it in a 6-month trend in order to determine if we're still in a seller's market or if we're in a buyer's market. So 1 week where there's an uptick or there's a downturn isn't significant enough until you look at it on over a 6-month spread. And right now it's still a seller's market. Now, are we starting to see more contracts coming in where there's some seller concessions? Are we starting to see where there is a little bit more negotiation after the contract is initiated because of the appraisal coming in, it may be at a lower expected value? And again, the appraisal comes in is the evaluation of the home after it's gone into contract, and also it either validates what the selling agent listed that property at, or it's gives it some wiggle room to dispute or to say, hey, you know what, we'll make up the difference by providing this seller concession. So now buyers, whereas before they couldn't even get their offers in fast enough. Somebody was just walking in the home, really almost ready with the contract before they even walked out of the home. Now
20, 30, 40 people bidding on the same property.
It was insane to hear those numbers. It's like
50, 100K over the property.
And really it's like, well, there goes your equity. I mean, at that point, when you're paying for a house already that has already built in equity, the seller's going to win regardless in that situation. However, now on the lending side, and this is something that I really it kind of really struck as you were talking about it, but it's something that I've kind of already started seeing when we're, I don't get to see a lot of the contracts that come into our office. That my focus is more on the marketing side of things and some other aspects of it. But when I do, get calls and I do see some things, when I'm starting to hear more about how we're trying to better prepare the buyer to go in and negotiate when they're submitting their offers with their realtors. And this is where that lender realtor partnership really comes into play, because you're going to create a financial strategy for your buyer in order to actually put the best offer, even if it has FHA, even if it has down payment assistance, even if there is some requests for for some seller concessions, or what other negotiating factors that the realtor is going to put into play when they have an actual discussion with the lender to build that financial plan for their buyer. Now, is that always a guarantee to get the home? No, but does that at least help educate the buyer and also the realtor and also the lender that we're going to work as a team to get you that home? It can stay on the market for 2 days. It could stay on the market for 2 weeks, but you're going to go in with your strongest offer when you work with individuals who are not only going to say, here's your pre-approval, good luck, go find that home. Hey, Mr. or Mrs. Realtor, this is the amount that they have to work with. No, this is the time where buyers and realtors and lenders are going to strategize how to best prepare an offer on those homes. And we're going to leverage the days on the market to do so.
Yep, you were correct. You got to work with a strong team.
Yeah.
Work with a strong team. That's why I love having the lender realtor relationship, because as a buyer, so many emotions and feelings, so many things change.
Yeah.
Even if you have 800 credit score, 100K in the bank, 200K income job, things happen to where hearing it from one person is decent, but when you can hear from two people, it's like having a great, mom and dad family relationship. So I love it.
It's like a team, like a squad, it's like these are the people that are standing behind you, when you're going in.
It's kind of like getting your information from Mama Gabriela and Daddy John. Same thing.
I'll write the heartwarming letter and then I'll just put in some really good words that really evoke that emotion for them.
You will. I know you will.
I try.
I know you're a letter queen. All right. Median listing price. So another data you're going to hear out there is, oh my gosh, is going to have the headlines in the news on a daily basis with exclamation points and bold letters. Listing prices have gone down. We're in a recession, housing recession at least. As you can see, every single year, including COVID year, prices go up and then they kind of level out throughout the rest of the year. Then they go up and they level out throughout the rest of the year, even with a slight dip towards the end of the year, towards November, December. Yes, have we started seeing a dip in listing price over the past couple months? Yes, when it normally levels out, we're seeing a dip right now. Is it an astronomical dip in my opinion? No, especially when you're counting year over year numbers. Buyers are still, or sellers still have 14% more equity this year in their home if they were to sell it right now than they did last year. Are you going to potentially get as much as you got for your home that you would have gotten last month or the month before? No. So don't compare your, if you're speaking to a seller's agent, don't be comparing what they're telling you your home is worth to what Sally 2 doors down sold their home for, or John 2 months ago sold their home for. But if you compare it to what Jimmy sold his home for last year, yes, you were still getting a lot more money for your property than they got for theirs. On average, last year, this time, would have gotten probably around 375K. And this year, you're still getting around 427K, which is going to be a difference of 50K difference. So yes, you may have lost 5K, 10K if you from not selling your home last month or the month before. But if you are in a season of life to where most people are not selling their home, it's like, oh, I want to get some money. People are selling their home because they got to move, because they want to be able to get more rooms for their family. They want to get less rooms for their family. People are selling because of some big why. And then you want to make all these other, then you want to make the numbers work out just because you have this big enough why. So if you understand historically, you're getting if you bought your home anytime in the last few years, you probably had one of the greatest appreciation years of all time when it came to home buying.
Yeah.
So congratulations to you. I would say be appreciative, just because you're still getting a lot more money than you would have gotten last year, the year before, a few years before, etc. Anything on the median listing price part?
Not so much. I mean, I'm going to say that, and then all of a sudden I'm going to chime in and say as something as well. You've covered all the bases of it with the realtors that I've, get the, definitely the privilege to be able to talk to them. I get to talk to realtors who are newer in the industry, and I get to talk to very seasoned professionals as well. And when we, I ask the questions and I love what they're telling me. I'm listening. I want to hear, it's like putting a pulse on what's happening in the real estate industry when you talk to them and let the realtors tell you their opinions. Some are opinions, some are facts, facts based, and some of them are just like, hey, I've never seen this market like this before. Some of them are like, yeah, this has happened before. This is what the strategy that I'm going to employ. And some of them are just, when it comes to as far as the median listing price, all of them will definitely agree that it is still better and higher than what it was before. And for some reason, everybody wants to go back and compare it to the 2007, 2008 prices, when homes went, obviously the homes, weren't the value that they there was a lot of factors. There was a lot of inventory. Homes were highly overpriced at that point. But what happened afterwards is that now you have all these homes that people are selling and they're taking losses. They were, to avoid foreclosure, short sales. And yeah, I mean, I was a buyer looking in that market, and homes were just getting snatched up by investors left and right, because even then in that turn of the market, there's still opportunities in real estate. So it may not have been, mom, dad, and kids, to advantage at that point. But investors saw that opportunity. That's really something that kind of happened here in Florida as well, is that investors really did come in and buy a lot of inventory, for investment properties, for vacation rentals, second homes, investments. So we really did see a lot of that happening. Yes, in the contracts that we were receiving in the office as well, but just in general, when realtors are like, yes, I have my buyers in California, they're looking to buy a home in Florida. My buyer is in, New York, and any state but Florida, they were looking to buy a second home or investment property down here as well. So median listing price is kind of on par with everything that they've been saying at that point. And right now, I'm not seeing a lot of investors. But what I am noticing, at least in the Tampa Bay community, and including St. Petersburg as well, is that the building of high-rise homes is starting to become a new thing. Newer in the sense that it's lands that were cleared and available. Now they're building residential homes in the form of, like, whether they're condominiums, whether they're townhomes. But I feel like we're starting to see a different type of residential living in Tampa Bay. It is going to help add inventory. I'm curious to see what that listing price is going to be in the next, honestly, by springtime.
Yeah. I watch it as well. And I actually, my office that I'm working out of on a daily basis is now down in downtown St. Pete, right, Central Avenue and 4th Street. And it's good, new high rises mean new inventory, etc. And if somebody's living downtown in a beach town where you're a couple minutes from the water, in my opinion, you deserve to pay the nicer prices for that. That is not and once again, I'm always looking for what's affordable. Yes. So to me, that's not the affordable game. That's not the let's try to find the cheapest price point game. Yeah. That is you are paying for the amenities of being there, being able to walk everywhere, the lifestyle.
That's a lifestyle living right
and
there.
It will service a lot of people.
Yeah.
But in my opinion, those are also servicing the people who they can afford a stick-built home, a new build. They can afford almost all types of homes. And so they're choosing to live down there. I'm trying to find the price points that service half of this median listing price.
Yeah.
Because at $427,000, somebody making 50K and their wife making 30K, it's going to be extremely tough, especially if you're a first-time buyer, to be able to afford 427K, which could easily be 3,500, 4K a month, monthly payments. So that's not going to fly for someone who their entire household income is only about 7K a month. Yeah. Good. Price reduced share. So this part of it is one that we're going to be watching as well. It did have a high. Once again, this is also one of those numbers that the last 2 years, it's been at the lowest of lowest of lows when it comes to price reductions that are happening in the market. And even the last 4 to 5 years, it's still at a low point. So you see, it did what it normally does. It normally stays about the same. It normally increases a little bit towards the end of the summertime. But as you can tell, our line jumped up dramatically. So it almost jumped back up there towards where it's been over the past, 3, 4, 5 years ago. It leveled out a little bit, and it went up, but I think it could. I'm not an expert at this, so the goal is for it not to keep going up like that. Yes. But it's very promising that it did jump up and then it leveled off. So hopefully it starts going back to its normal trend like it has been in those normal years at 2017, 2018. 2019.
Yeah. So there's the dark blue line. What year does that represent?
2017.
Okay, so 2017. And when we look at that previously, before there was a stark increase that happened, and then it did a little bit of leveling off, then it dipped back down, and then it went back up, and then it started curving back down again. So right now we're focusing on that. I guess we'll call it like the yellow amberish kind of color line at this point. That's the line that we're tracking right now.
It's corn.
Yeah, it's corn.
Continue. We're tracking corn. So
I'm sorry, I've lost my cool.
Continue on, Gabriela.
No,
the one that cares.
Well, it's corn now. I mean,
yeah. So the corn line is
well,
it's similar to that blue line, the skyline.
Then it's skyline. We do like to have fun and sprinkles, and today it's corn.
Yeah, we're going to forget that conversation. Adults eating sprinkles. All right, continue.
No, I kind of just finished it off really at that point. So I was just looking at some of the other lines, and this is where I get into, I go down a little wormhole, and I'm immediately trying to look at, okay, what other lines kind of have that similar pattern or similar enough where I'm like, okay, the blue line seems to have that similar pattern a little bit. So now we'll just wait and see.
Yeah.
We'll wait and see where it ends.
Yeah.
Or where it won't end, but we'll see where it's going.
Yeah, going from 6% to 18% is a big jump, but going from 18% to 19%, that doesn't seem significant to me. So we'll see where that goes. Hopefully it goes back down again. But I do know that it's not going to be easy as a listing agent. It's been easy the past couple of years, listing agent. Yes. You walk into an appointment, seller says, I want to sell my home for X amount. You say, sure, let's try it out. You just throw it on there, and there's a good chance you're going to get tons of bites on it. Now, as a listing agent, you're going to have to get a little bit tougher with sellers. Coming with graphs and data like this will help you out a ton. Graphs and data in combination with scripts will equal to success, in my opinion, if you're trying to get these listings, because if they're comparing to, their neighbors that sold a month or 2 months ago, they're going to be looking at, if you're looking at median list price, you're going to be looking at one of these numbers, while we have to be looking at where is it trending right now. And in every market, even when it's been crazy hot over the past couple months, the buyers that got the best offers are still the sellers that got the best offers were still the sellers that priced it at the appropriate price level. 100%. Yeah, this buyer who, let's say your home this is an appropriate level for it. Yeah, this person may have over the past couple of years been able to price it here and somebody buy it, but you would have got less fish up here. If they would have priced it down here where it should have been bought, the market would have drove it potentially up to here or up to here. And that's not just me talking, that's just how the market works in real estate. So pricing it correctly to where it should be priced, to where you get the most buyers biting at it, that's going to be able to drive up your price so you can have the highest net.
And I went really with the demand part. So then, definitely what are like remind ourselves, at least I'm going to vocalize that the demand part of it was that listing agents who price their homes accordingly, really did see that. And, the offers were coming in higher because the buyer's agent said, you know, Miss Gabriela, I'm just going to let you know that that house is priced well. It is priced accordingly based on the market in that area and what the home has to offer, etc. So there was a little bit of like a negotiating tango that happened between the seller's agent, presenting all of that information to their sellers. Like, look, if we price this home at this, we're in a strong market where there is a demand for a home with your features, your location at this price point. Buyer's agent is going to tell their, buyers, like, look, the home is priced correctly, or is priced where we want it to be. It meets all the things that you want on your must-have checklist, because we have the seller's pitch and we have the buyer's pitch. And the buyers were telling their buyers, like, let's go in with a little bit of a stronger offer and offer 5, 10, 15, 20K, whatever X over amount of the listing price. And now, and that was then. So now we're looking at some different strategies. When I'm mentioning some of the contracts that we're seeing come in when it comes to seller concessions, there are some contracts that are coming in initially where the seller will even list on the MLS, and the MLS is just the listing that the realtors have to put in the home so that it's available for other realtors to see. It's there's the regulations behind that. I'm going to leave for the experts, the people that are listening. And if you want more information, certainly contact a realtor or ask us and we'll connect you with somebody. But when it comes to how we're looking at some of those MLS information sheets for that home, it gives you all the information, things, when that home was made, how much square footage. And then there's a section where they're even talking about the financing, things that they're willing to accept at this point. Because there was a time when there wasn't. They're like, bring us your best offer. That was it. Now they're looking at some of the homes that people waited to list until now, whether it was life, market, whatever decision, and their seller is willing to provide X in seller concessions. So you still have to put it in at that offer, but they're going to offer something else as well. We're starting to see a little bit of those coming in. So sellers agents know that that's what they have to pitch to their sellers to get their home on the market and make it competitive, because days on the market are going to affect that. They don't want to come back and do price enhancement, reductions, improvements. Those are key words that realtors are using in the industry to say, hey, this home did not get priced where it should be, and we're reevaluating it, and now we're bringing it back to something a little bit more competitive and reasonable. Each realtor has to have those conversations with their sellers, but it goes back to, you can't compare selling your home today to what it would have been like last year. Again, those days are past. They're gone for now. Let's focus on the current market. So kudos to agents who go in with data and educate their buyers and sellers, because you're the ones that are going to win out that deal.
You got it. And this is actually a shorter podcast. So that was going to be one of our last slides. We'll quickly touch on some of my favorite things, which is Hometown Heroes. This program is still out there.
Yes.
It has a lot of money that they're funding. If you are a first responder, if you're a nurse, firefighter, I love my firefighters. I don't know. I feel like almost any event I go to over the past few months, I'm finding firefighters and we're becoming best friends. So yeah. Firefighters, police officers, military veterans, healthcare workers, teachers. I've even seen massage therapists, PTs, chiropractors. Yeah. I mean, many down payment programs, you can only go up to a max income of around 70K, 80K, yeah. Sometimes 90K. This program goes to about 120K in almost all counties in Florida. And it goes up to $25,000. Many of them have a max loan amount. The other programs, many times they'll only go up to maybe $360,000 loan amount. This program will go up to 500, 525, 550. it gives you a lot of options and room if you're trying to get slightly nicer homes. So great program in my opinion. Anything else you'd like to add about this program?
It's an excellent program. There's over 3 million people in the state of Florida that actually qualify for this program. And I was on the Florida Housing website, and as of October 3rd, they updated their list of professions. Something that they did make us aware of back in June 1st when the program first rolled out is that as as the program keeps going and they see more loans close with that assistance, that they'll reevaluate certain positions that maybe fall a little bit in that gray area, that they're in the education part, but maybe they're not really directly teach.
Yeah.
Again, if you fall within these categories and you work in these industries, we'll check out if that profession qualifies for it or that specific title. There are, of course, certifications that you have to have that have to be verified as well. But for the most part, one of the best programs that has rolled out, it has encompassed another program that was phased out into it. And, we can't talk about this program enough. We really, really can't, because it is in times like this and really in a lot of times when buyers are just, buyers need to have a competitive edge. And a competitive edge is sometimes having down payment assistance. And if you qualify for it, then it's going to help you. And now, as I said, as we're looking at some changes that our sellers are, making on their listings, and working with your realtor, with your lender, to basically strategize your financial situation to make the best offer. Even Hometown Heroes program is going to be that. And by the way, I'm going to just little heartstring.
Go ahead, Gabriela.
Thank you to all of the Hometown Heroes, especially the ones that went out into Fort Myers and South Florida in these past couple weeks. We have seen your tremendous hard work, your courage, your sacrifice that you have made to go down there and help our fellow Floridians. We're still nowhere near what the damage is going to look like. But first responders were the first to respond. So, from my family and from all of us, thank you.
Yeah, you got it. I'm proud of it. I'm proud of the people that are down there assisting right now, because we do not know how bad it's been so far. Yeah. But once again, if you're a real estate agent, get this flyer out there. People need to know about it. Yeah. And if you're a buyer, stop thinking, get with a lender. I mean, our team is closing at least a few of these every single month. Yeah. So get with either myself or someone on our team. We can definitely be able to close these for you. We're closing these things in 30 days or less right now. So just get with us. We can be able to assist you with this. If you're not a first responder, once again, you aren't, get with us today. We can normally have members within 24 business hours. We also have other down payment assistance programs as well. I'm a huge fan of down payment programs when they work out for the buyer. If a buyer's got $100K in the bank and they're a first-time home buyer, I may not recommend these programs. There may be some other programs that may be slightly better for them. But if you're someone and you have 20K in the bank and it's going to cost you 15K to close and you don't want to deplete all of your savings, these programs work. Having some additional cash for potentially that one thing that may go out of your home 3 months from now or 6 months from now. There's 100 different things that are in a home that you have to be ready to potentially fix or have someone else come in and look at, et cetera, to where this program helps you feel as if you can have those additional savings to be able to get through those first couple of years of owning a home. Because once you're through the first couple of years of owning a home, you kind of know your home. It becomes all like a child to you, and it becomes a little bit smooth. But yeah, majority of these programs, there's county programs as well, but I mainly recommend the state programs just because they're easier to fund. You can fund them anywhere in the state. And they're just a smoother program. We want to be able to get you guys closed. So even though county programs may say 30K, 40K, 50K, these state programs 10K up to about 25K with the Hometown Heroes program. Yeah. But once again, they do allow us to be able to close 30 days or less. We can close them as good as we could almost any of these other government type of loans like FHA, VA, and it gives out a lot of assistance. So anything else you'd like to add with these other programs?
John, this is your field of expertise, and you know it very well, backwards and forwards. But I will, I will always go back to saying, if you're going to work, if you're going to buy, the best thing to do is to just explore all of your options. And you give a great example of, some people, it may be a good program for them, but it may not benefit them at the time. So there's countless programs out there. And when you hear something that I will remember from, I was helping a client with a transaction, just helping with some paperwork, not the loan originating part or the real estate part, but I did work with the realtor to make sure that we had to put together the packet for the City of Tampa program. And let me tell you, the qualifications that program required were, they're intense. There's a lot of, you have to write letters. You can check it out, and that program extended the closing that we were aiming for.
My recommendation is, if you're a buyer and you've already gone through the program and you've got the counselor and you're just completely adamant on it, I'm not going to tell you not to go with those county programs. But if you're a fresh buyer, come to someone like myself first, who has access to all the programs. I can be able to lay everything out for you. And that way, over the next couple of days, couple of weeks, etc., you can be able to use me as your main counselor to guide you on where you should go, how you should do it, how you should move, etc. And if you have access to those programs and you're adamant that you want to go with those, you are the buyer, you make the final decision in all of this.
Absolutely.
But there are some programs that maybe, like you said, easier to close, still gives you money, a smoother process for you as a buyer.
Yeah, because right now it's, we want to make sure we close as soon as possible, locking your interest rate so that it's not floating. That's the vernacular of the loan originator world. But more importantly, that you're working with a lender who is going to educate you on the buying process as well. Making a mention that some of these programs do take some time to get through and actually get the assistance money. Also, there's a lot of timelines that have to be considered as well. So there's a timeline of the program itself, whether it's city, state, county, and then there is, the Florida, programs, Florida Bond, Florida Housing Program, et cetera. And all of them have their own timelines. But the timeline that matters to the buyer and the seller is the closing date on the contract. That is the one date that both parties can agree that they want to close by. So
good.
Kind of a quick hard stop there. So again, it goes back to what I said earlier. You got to have a team that works with you when you're buying or selling your home, and also a financial strategy on how to achieve that.
You got it. This is all a communication game.
Yeah.
So Gabriela, we're getting at the end right now. We'll have some more next week. I'm gonna have a lot more next week, so be prepared for that. But final thoughts on things we've covered today. We've covered rates, we've covered credit, we've covered the real estate market today. We'll cover some programs. Final thoughts on what we covered today. What was kind of like in your head right now?
Really, right now, there isn't too many more final thoughts that I haven't already mentioned throughout the presentation, which, I give you kudos always for putting something really good together, and also pointing out a lot of data, because we're taking the data and we're trying to make it so it's understandable. And if it's still not something that you understand, then there is John's contact information on the slides as well, which you'll put on there as well. My final thoughts right now is that let's focus on accepting that, we can compare a lot to what's happened in the last couple years, 2-3 years, but that isn't going to help your situation today. So if you focus on what your why is, what your goal is, and then working with your team to achieve that, then that is where your strength is going to be to go through the next few years as rates shift, move, however you want to look at it. We always express that the news is going to sensationalize, market data for like the 1 month, 1 week. But if you're interested and you're going to get into the game, or you've been out of the game for a while and you're looking to get back in, then just seek out a professional that you trust and ask questions. You will be very surprised by how much or how little someone knows until you start asking them questions. It's not just the pitch. The pitch, all sales professionals have a pitch, but it's when they understand you, when they understand what you want in today's buying market or selling market, then that's the part that's going to matter the most. Buying and selling is not only just a financial transaction, it's an emotional and mental transaction as well. If it goes well, you rave about it. If it goes terrible, you rant about it. And our goal is to have, raving fans about what we're doing in the market, regardless of what is happening in the market.
Good. Go to your doctor when you need health advice. Go to your real estate agent when you want to know about home advice. Go to your mortgage lender when you want to know about advice on how to be able to get qualified to purchase a home. Thank you for listening to us, and we'll see you. Thanks. Have a great day.
Have a good one.
Recording stopped.